everybody. Welcome to Monday Morning Must Knows. My name is Merlin Rothfeld, and here are 3 important things to pay attention to for the upcoming trading week. Now, last week we had finally a negative week, a down week for most of the major market indexes, NASDAQ coming right into some demand zones, and we'll see if that holds because I do have a lot of NASDAQ companies reporting earnings this week. So let's kick things off with our Monday Morning Must Knows, talking about the earnings season. Now, we have 66% less earnings this week than we did last week. Last week we had, I think, 1,800. This week, we only have 603 companies reporting earnings. We start things off on Monday with a little-known brand called Suncor Energy. On Tuesday, you've got Home Depot, Cardinal Health, and Allegiant Technologies. Moving on to Wednesday, probably one of the bigger days of the week, you've got Cisco Systems, Target, JD.com, and TJ Maxx. You'll notice a theme here, going to be a lot of retailers this week. Now, we also, since you have Target on Wednesday, may as well throw in on Thursday Walmart, Applied Materials, Ross Stores, and Keysight Technologies. And on Friday, you have Palo Alto Networks, John Deere, and Estee Lauder. So, a lot of important names here, particularly with the retail sales side of things, and that's what I'm going to dive into next because we do have a pretty big retail sales announcement, a release data point coming out this week. Let's look at that one right now. Retail sales come out at 8:30 a.m. Eastern time on Tuesday, and you can see it's been pretty flat. Going all the way back into 2015, retail sales typically barely fluctuate above and below that zero line. Obviously, you want it to be above the zero line because that means we have growth and increased sales, which of course means more GDP, more jobs, etc. Right now, it's at 0.2%. Now, I'm going to zoom in here just a little bit so you guys can see a clearer picture of what's going on, at least in the shorter term. Now, going back into late 2021, you can see there have been some decent fluctuations, but over the past 3 readings of it, past 3 months, we've been slowly declining. And again, that 0.2% on the hard red edge. Now, expectations right now are that we're going to come out at 0.4%, which would be this red line right here. Now, that is certainly an increase over the current number, but nothing that really says we are back to boom times and roaring sales for companies out there. So just something to keep an eye on, the retail sales numbers for this week. If that sales numbers come out very high on Tuesday, then that may give the expectation that some of those other retail companies reporting that week may have better than expected earnings. Okay. No eyes on U.S. Central Bank, nothing on the EU. We have nothing worried about the Bank of England. It's been all quiet on that front. However, for those of you who are Forex traders, we don't really bring up Forex charts too much here, and that's my fault. I'll do better in the future to bring up some more Forex charts, but we do have a pretty, I would say, a decent announcement here coming from New Zealand. I know not the most common traded currency pair out there, but the New Zealand dollar is one that I know many of you might be trading, and there is an announcement happening this week, so let's talk about that on Tuesday at 10 p.m. Eastern Time. That's right, that's a late night. God love the Southern Hemisphere, the other side of the world there. They're coming out with a rate announcement that is going to keep things right at 5.5%. Now, if we look at the longer-term picture here, you can see they had an extreme aggressive acceleration of rate hikes, just like the U.S. did and Australia and many other central banks around the world. Right now, it's stuck at 5.5%. Now, at the July meeting, they actually paused and stayed at 5.5%, and that's what the expectation is, yet again, it will stay at 5.5%. What's interesting is the chart of the New Zealand dollar. This goes back into 2011, so covering the same period of time that we just saw on the previous chart. Been pretty weak overall, right? We were up at over 0.85. We dipped all the way down to lows about 0.55. And when we zoom in on the daily time frame, you can see that the past month or so has been really weak, going from 0.64 down to 0.597. Now, I know that doesn't seem like a big deal, but this is a global currency, right? It's not a specific stock. This is the value of a country's currency, and it's been on a precipitous slide here over the past month, and that may have to do with those rate pauses. So, that said, what can we expect from this rate announcement? Volatility. Just like I would say for any rate announcement, it doesn't mean it's going to go up or down particularly. It just means there's a lot of uncertainty. Not only around what that rate announcement may be, but also what those central bankers say about that currency and about the government's position, or at least the central bank's decision on where things may go in the future. So that's an important one for you to keep your eye on for this week. That, my friends, is your Monday Morning Must Knows. We will see you next week.